Okay, now this is not a short-term trade. It means what? This is by nature is not going to be a 1 week, 2 week trade. Okay, the primary position is shares. We only buy shares or buy long dated options to do this type of trade. Means what? We are looking for trending stockwards outwards. Okay, okay, it's trending stock upwards. Okay, so if you, let's say you are trading a stock, and let's say, Thomas, I think this stock will move upwards, downwards, or for next 1 week, 10 days, then my advice to you, simply sell a bear call spread or bull put spread. That'll be cheaper and safer. Okay, so you understand what I'm saying now? Okay, we buy a share because why? We are hoping for Wayne to retrace. Once Wayne have broke out, okay, before we go further, let's see a chart here. This chart seen from June last year. This is a 9 months chart. As you can see from here, we and on the trade on the 16th, he broke out the $75 channel line. You can see you can see the two black line here now. One double bottom at the top here. Okay, triple top at the on the top, bottom double bottom. So this is what we call a trading channel. $50 to $75. He broke out $75 plus one price action value 480. We push up to make it up round up to $80. Break out $80. Then we enter the shares. Okay, understand though? So this is not a short-term trade. That means that it's not going to be 1 week, 10 days trade. If you're going to do a 1 week, 10 day trade, I repeat again, do a credit spread. Okay, you ask the question, how do we find a portion like this? You can find you just simply find companies that do channel breakout, companies that have what we call confirmation trend line going upwards. Okay, any company trading upwards, trading up or trading downwards, you can do. You don't need open chart one by one. You just may read news. You can use Thinkorswim or other platform, okay, by scanning for soft charts that moving up of to a 20-week high or 40-week high, wherever it is, okay, or using exponential moving average crossover, anything can. Okay, Thinkorswim platform and Option Express platform. So I think in TradeStation also have what we call scanning software with to scan for you certain chart patterns or technical patterns. Okay, let me see else. Chart tie. When I buy stocks, I should long stocks method. What are the criteria? If I am bearish in any stocks, can I use it? Yes. Yes, you can do bearish or bullish. But before we do any of that, you make sure that you have confirmation, like this, like our good friend Wayne, like that, confirmation, a bullish breakout or bearish trend breakout. This is a breakout. This is what we call a breakout trend trade. Okay, the last 2 days you went for a technical reach, going downwards, but it's still okay. Okay, if we are still okay, even the thing retraces out to $80 level, we are still perfectly alright. Why? Because we really have made money in the last 2 weeks from option selling. Whatever credit we collected is actually our income. In the event of the market going against us, whatever credit we collected become our insurance. Okay, first criteria, okay, chart tie, is to make sure the trend is going upwards. Okay, and the move must be reasonably strong enough. How I know? Simple. Look at the option premium analysis. Okay, whereas I teach you already. Take it at the money call, at the money put, divide by the underlying price, compare it, then you compare it with S&P 500 index. See the option premium, is it higher than that of the index? Yes, then you can do this method. If the premium calculated for selling and the money call and money put is lower than the S&P 500 index, then this method do not do well. Understand? Chatai? Okay, I don't think it's wrong word to strong company, because Jeffrey, okay, Jeffrey is one of my latest students from Singapore. Okay, Jeffrey, you can't say, oh, fundamentally is good, strong branded company. It's not. We are traders. We trade on based on two things. Okay, okay lah. Two things for this, in this case, two things. One, chart patterns, price action movement, inside. Two, if you want to use three-dimensional, you use one three-dimensional trading, 3D trading or multi-dimensional trading, you have to make sure the option premium is enough for you to do this trade. Okay, it's enough for you to do this trade. There's a few companies lying around that we can do this kind of trade. Okay, if you want to, why don't you take a look at Herbalife? Why don't you take a look at New Skin? Why don't you take a look at Weight Watcher? Okay, WWT, NUS, HLF. Take a look at these few companies later on. We'll take a look at these few companies later on. So, any questions? Any questions? Okay, good. So now we will treat a trade. How many of you have entered your trade? I know Jeffrey, you entered a trade. Have you opened up a new corresponding short trade for your long April trade? How many of you have opened a calendar or any position away now? Okay, tell what, Jeffrey, have you opened a new short position for your long leg? Okay, roll over. So your short leg, what strike price now? Now she rolled over $88. How much you collected for your list trade? Okay, so Jeffrey have sold. Jeffrey, wait. I think if my memory serves me right, you have a long 85 April call. Jeffrey a long 85 April call. Okay, she bought it for about $300 over for the $300 for the trade set. Okay, so now she has sold it. So last week expired 85 expired in the money. So we closed the trade, roll over the trade, and sold 88 call. So now basically Jeffrey have 85 April 2016 call, long call, which is his primary leg. His secondary short leg is 88 call. Okay. Any questions so far? How many of you are interested to open a multi-dimensional trade? Okay, for this win. Initial risk budget $500 of less. Okay, so far now Jeffrey trade so far cost him a grand total of less than $500. Okay, less than $500. Okay, after rolling his position, is still under $500. So now the market price for Wayne now is $83.29. Okay, so the cheapest possible way to do this trade is very simple. Listen to me carefully. We are using options as a substitute for this trade. Listen to me carefully. So when I buy a share now, it will cost me $8,340 to do this trade. As a trader, you want to learn trading. You want to learn trading as low as possible. Okay, you can buy a straight call here for $4.60 bid price. But like all good traders, do you think we should do this? No. You want to do something as cheap as possible. We want to sell a 85 call. Why 85 call? Simple. Why I don't sell a 83? Because we are believing this Wayne will go back to will actually a bullish trade. Okay, so we go here, you right click here, we go find a calendar. Okay, why 85 call? Why I don't do 83? If you look at April here, there is no 83, 82, 81. Thomas, how come now this Safari expiry got more strikes? I hear like that. Like here got more strike, got 50-cent strike, 82.50, 84, 84.50, 85. And here April 1 month down to somewhere in April expiry 250 strikes. But what do you mean by 250 strikes? Means that each strike price 250. It's because market liquidity. As ladies and gentlemen, it's only 50-cent strike or $1 strikes if there is enough, if what we call demand, if there's enough buyers or sellers. You still far away, man, you cannot do this trade. So we have to stick $85. So we stick the 85 strikes. So we sell this Friday expiry. Then our long trade will be doing April. Okay, look carefully. If I buy the call itself for April by itself, a simple call, it will cost me $4.55. If I do a calendar, I only need to pay $3.11. So as a trader, you sure you want better? You want to pay $4.55 or you want to $3.14? Because after we enter a straight call or we enter a calendar, Wayne may have some bad news come up from China and the share tank $20 against us. When it happen, when it's going to happen, I do not know. But there's a good possibility that news from China will move this stock downwards quite badly. Because Wayne, fundamentally speaking, only got two places. They have what we call functional casinos, means business in protect. One, the casino in Las Vegas. Two, casinos in Macau. So currently now, for the last few years, the biggest earners for this company, Wayne, is coming from China's side. Any questions about the calendar? Thomas, what happened if the market go up to $86? I'm losing money, Thomas. I'm losing money now because I have to buy back my short call. My short call is in the money by $1 or $2. Well, ladies and gentlemen, relax. If your short call is $2 in the money, doesn't mean you lose $200. the fact that short call, your short call and long call is exactly the same strike. So if your short call lose money, your long call means make money. Okay? So this is good. Thomas, when do I start losing money? For you to lose $2.14 will come out in 3 scenarios. Y'all, are you interested to know the 3 scenarios now? Because I see y'all don't ask any questions. Or y'all cannot hear me. Okay, okay, total response. The 3 scenarios that possibly, okay, the 3 scenarios possibly can lose, for you to lose maximum loss of $3.18 any moment in time, okay, is 3. 1, the thing shoot up by $30 on top. 2, the thing drop by $30, drop by $25 to $30 on the downside, about $30 on the upside. 3, you hold to expiry. Hold to expiry, expired worthless. That are the 3 possible ways you can lose your maximum $3.14. So, if the market dropped $10 against you, your short call expire worthless. But your call now is far out of the money. Don't mind. You still can sell it for maybe $1.50, $1.80. Okay? That means what? You need to lose $1.30, $1.40 only. Okay? So repeat again, the 3 ways for you to lose all your $3.14 for this trade is 1, hold until the end, expire worthless. 2, market drop $25 to $30. 3, market go up by $30 or more. So as I mentioned earlier just now in the webinar, the method you do for this trade now, okay, is good for trending stocks. This is not good for Superman stocks, okay, or ultra movement stocks. Okay, understand so far? Chatai, Sawani, Jeffrey. Okay, so you can do this trade now. Thomas, any questions? You all never asked me why April. Why, Thomas? Why don't I do somewhere in June or September or July? Okay, anybody want to know why I do up to April only? Why I don't want to do up to July or maybe December or January next year? Yes, partially right. But we're already on a trend. If you want to ride a trend, longer time frame better, correct? Okay? Not exactly right answer. Any more people? Chatai, please. No, Jeffrey, don't answer, please. I know. I told you already. Sawani? Chatai? Premium? Good question. Good. Yes. Good. But wait. Why? Why the premium is a problem? Okay, now it's here April, correct? After April is June, correct? You see, I sell March 2nd call. April $3.20 here. If I go to June, it's $6.30. Okay, why is it so expensive? 2 months only, almost double in value. April $3.20. Okay, June $6.80. If I go to April the 4th, $3.59. Sawani, please, Chatai, give answer, please. I have to ask this question because that's the only way for you to learn. Over budget. Good point. That is one reason. Your initial budget must be $500 or less. Good. Sawani, Chatai, Jeffrey. Okay, ladies and gentlemen. Okay, especially those do swing trading one. Do ask yourself, when is the next earnings announcement? Okay, the reason why it's expensive, because there is earnings announcement coming up. Correct. When's the earnings? We do not know. But we know for a fact the last earnings conference call is somewhere 11th of February. Means what? First 2 weeks of May, there will be earnings announcement again. Okay, this is something important. You need to listen carefully. Why earnings? Why earnings is important? Because the moment earnings come out, all the previous chart pattern, price action, value, whatever you see, will be superseded by the earnings results announcement conference call. Okay, so once any news earnings conference, FOMC, non-farm payroll and things like that, if the news is abnormally bad or abnormally good, will definitely break the pattern. Means that will definitely break the chart pattern. Okay, so for this trade itself, your mission is not to hold this trade through earnings. This is natured by a swing trade. Means what? We want to get out any position you want to do this type of trading. Okay, unless you're doing long term, unless you're doing investing, you should close your trade 1 to 2 weeks before the earnings. Okay, an earnings announcement. Yes, you should. First, keep the 3 months period or less. It's good. We should do that for 2 reasons. One, keep our entry costs low. The 3 months calendar versus a 6 months calendar. Of course, the 6 month calendar is going to be much more expensive than a 3 months or 2 months calendar. Cost is one thing. Okay. Once we are making money, we can roll over the trade into something in the longer term. But initially, we do not know whether this trade is a good trade or not. So, as much as possible, as a good trader, we want to keep our initial risk capital as low as possible. Understand? Secondly, because we are doing this trade because we are a swing trader, we are basing on option premium analysis. We are using price action analysis. We are basing on trend lines, so-called trending lines or things like that. But ladies and gentlemen, all these three we can and often will be superseded, distorted by earnings or other economical key announcement. Okay? Any questions? Okay, understand now. Okay? You all understand why must it keep it to 3 months or less? 1. Lower your cost. 2. Make sure you don't overlap into earnings trade. Because if you overlap earnings trade, of course your trade can be a superstar trade after that, make a new make multi-high or multi-low. On the other hand, there's a good possibility when earnings come and announce the earnings the news do not meet expectation, and the meet expectation or break expectation, and so-called the thing reverse up, will reverse up or reverse down like a Superman. Question? Okay, if not, let's do a trade. So the trade now is okay. The 85 call here, we are going to sell 85 call for this one. It's approximately $1.24 out of the money. You can buy a straight put if you want to, no straight call you want to. It will cost $4.65. Okay, so which one better? You want to buy a straight call or you want to do a calendar? Okay, repeat, ladies and gentlemen, nothing wrong. We as a trader, we don't trade on difficulty or hard to understand. People tell me options very dangerous. Options is the safest instrument to trade because of the ability. The options give us ability, give us the ability to keep our entry cost to lowest. Okay, so let's do a trade here. Confirm, send. Okay, those who have do a trade up, please kindly send a screen capture of the trade to the night group so I can help you to monitor the trade. Any corrections or any other things, I will so called update you on the spot real time. Okay, you can. I can do again. Yes, you can. Provided Jeffrey, you can do as many times you want to. Provided is within your risk budget for that particular underlying. Unfortunately, you don't have the risk budget. Okay? So just now I mentioned you something around this night, correct? Let's go and take a look at these few counters I mentioned you just now. Okay, let's look at Nu Skin now. Okay, Nu Skin. Okay, interesting speaking. Okay, look at Nu Skin now. It's a cheap company now. Okay, but let's look at TA first. Why? Do you think you want to go for a long trade now? This trade? Anybody think Nu Skin is good for a directional trade? Gentlemen, comments, ladies, comments. If not, it's going to be very hard to teach you all. Okay, ladies and gentlemen, Nu Skin is nothing wrong with it. For you to enter this trade now, you can. Okay, subjected to the following things. One, it must break out above a $35. Okay, the trade I put in got filled already. Okay. Must break up above 35. Okay, then if you want to do this trade, you can do it as a credit spread. Okay, or do as a credit spread. Why as a credit spread? Because from 35 to the next support resistance 9 is at 38 and 39 level. That means what? You only got a chance to move $3. So for this trade itself, okay, you don't need to do you will still do a multi-dimensional trade, but it will be on one time frame. Just now I show you the main one is multiple time frame. Why? Your leg is April. You can sell March 1, you can sell March 2, you can sell March 3, you can sell March 4 against your April leg. For this Nu Skin trade, you don't It's actually one dimension, one time frame, not multi time frame. Understand me now? So if the underlying break above 35.50, okay, or 36, you can sell a short term bear call bull call bull put spread. Okay, do a bull put spread. Okay, understand so far? That is big the 35 level, 35.50, $36. You can do a bull put spread. At what price you sell? Please sell one price action. Okay, I repeat again. When it's not only a multi-dimensional trade, it also what we call a multi-time frame trade. Okay, when why multi-time frame trade? Because your long leg is April. So from the long leg itself, you can sell March 1 expiry, March 2 expiry, March 3 expiry, March 4 expiry. Okay, so you have one leg, one trade, sell multiple time frames. This trade looking at Nu Skin now. We are looking at one dimension, one time frame trade. Means that you do one 5 days expiry or 7 days expiry. Okay, you only go in after it break the $35.50 level. You will sell a bear call spread for this expiry or next expiry. Okay, now how much you sell for 1 week for this type of thing itself? My advice to you, at least try to sell half a price action value below. Okay, daily price action value is running about 170, 180, 190. It's okay? Yes, correct, Vicky. With the underlying go above 35.50, you go and sell a bear or a bull cost, a bull put spread that approximately $1.70 downwards. Sorry, it's actually supposed to be bull put spread because market go upwards. Okay, Toh said, what is 35 or 38? Ladies and gentlemen, listen to me carefully. If the underlying break above the 40, go break above the 40 level, then you can employ the win method. Buy 2-3 months options to expiry, sell current week. Why? It break above 40, the next level support recent 9 look at is 45 or $45. Let me check the 1 year chart. Okay, $45. Okay, okay, 40, no, sorry, it's actually $47, 47, $45. So from 40 to $45, there is more meat. $5, we can make some money out of it. I repeat again, for this Nu Skin trade, one time frame, sell two expiry out, underlying break above $35.50. Okay, do a bull put spread that is approximately $1.70 downwards. Sell short time frame. Maximum time frame you sell for this trade is 2 weeks. Better 7 days. Any question about Wayne before I go to another company? Now, our good friend here, interesting. Herbalife, bull market, bear market, fight over the place. Okay, from the from the year low of $32.50, now is $55.55. Okay, not bad. Okay, that's a nice trending some. So for this trade, for this company, okay, what can we do now? We cannot do much things. Directionally, we're not doing much because if you can see from the last few candles here, it actually is sideways between 51 to 58 level here. Okay, doesn't mean doesn't mean it doesn't mean you have no chance to make money. You still got a chance to make money. Let's go and do a short-term trade from New Skin. No, not Skin, for Herbalife. HIF. The chart pattern look great, look good. However, whether we can do a trade or not trade will depends on the option premium. Nothing else, okay? Okay? Before we start, what is your risk budget if you want to do a trade for Herbalife? Huh? Gentlemen, Chatai, risk budget $500. Now you influence you have been well taught by me. Everything is $500 or less. Let's look at the chart patterns. Okay, on the shorter time frame, because we are doing a trade that technically lasts 7 days to 14 days cycle. Okay, 1 to 2 week cycle. So we don't need to look too much. Look at the pattern. Nice. $58 upper high, $43 upper low. So question now, ask you all, bullish or bearish, going up or going down? Gentlemen, ladies. Chatai, up or down? Up. Good. How about rest of you all? Bullish. Sawani and Amy. Sorry, Vicky and Sawani. Up. Okay, fine. Okay. First, what is the daily price action value? The daily price action value on the 14 days, 250, 250, $2, $2.50, $2.73. So we're looking at about $2. We're looking at about $2.50 in 1 day price action value. So what I do for this trade is very simple. Listen to me carefully, ladies and gentlemen. Okay, let's look at weekly cycle first. Weekly is $4 up, $4 up, $4 up. Okay, fine. Market is 59, 44, 54, 55. So if we sell at $59, is there money? Let's see. We are selling 11 days away. $59. Got money to make now. Let's go and do a range bond stock income trade using Iron Condor. I will not say income trade is the right word to use, but I will use it as this income trade is not your index income trade. Okay. The only reason why One reason why I do this trade now for you all to learn is because why? This company, if you are looking, our risk budget is not $5. Our risk budget is $1 or $2 range part. 59 call, let's go to 60. For $50, so we're looking at 51 here. Yeah, fine. We will take the 51 here, is it? $51. 51 is okay, 51 just nice. 51 put just nice because it's $4.50 out of the money. Basing on our weekly price action value. Enough money lah, $3.38. Let me check first. Not very much there. So ladies and gentlemen, is this a good trade? Come, I know some of you asking me whether you can do ICs on stocks, and now I'm doing one in front of you now. Any question? Do you think it's a good trade? Underlying is $55.39. We are selling a 59 call. Okay, H60 call. We sell a 51 put, H50 put. We are using weekly price action value of $4 plus. A good trade or bad trade? How many are we interested to take it straight up? Chatai say good. How about the rest? Everybody want to calculate what's the return over risk for this trade? $0.40 around that 40% return. Thomas, why Thomas? How come when I do the same method on indexes I receive lower percentage return over risk? It's simple. Between this one and the index, this one higher chance of losing money, because remember, this is a share can go crazy on you one. Okay, so is this a good trade? Yes, it's a good trade. Maximum loss is a good learning trade. Maximum loss is 62 cents. Okay, you can sell a $2 spread for $72. Okay, somebody calculate for me. Short the 60 call. Wait. Short. Oh, wrong. Wait, give me that. Check something is not right. $0.61 for the trade. Short 59 call, buy 61. Short 51 put, buy 49. Credit got 61 credit. Which one better? The $1 spread better or the $2 spread better? Please calculate and give answer to me. How about rest of you, Vicky? Sawanito? Okay, so $1 spread. Let's go do $1 spreads. Sell short 59, long 60, short 51, long 50, short 51, long 50. Good, quite then. Sawani, you're referring to which one? The $1 spread or $2 spread? Actually, Sawani, whether it's $1 or $2 spread, the chance of winning is is exactly the same. Okay, the probability is the same. The break even is different. The lose is different. Okay, what's the difference? Both of them are same short legs. 59 call, 51 put. So the safety zone is the same. Now it's only the break even is different because the break even is different because of the $2 spread have higher dollar risk. Questions? Okay. So this is let's say we don't greedy, let's say we set 30. Oh, now ladies and gentlemen, start from 39 cents to the 43. We are very greedy. Let's go and whack now. Yeah, 42 cents here. I can see I got some butterflies here. Unfortunately, enter this afternoon. Up to now, is have not filled my orders yet. My iron condor for March the 4th. I've been queuing to take profit. Now it's unfortunately it's not. It's not here there. Okay, any questions? Okay, Sawani, Vicky, any companies you want me to take to look? Anyone or you want to buy any shares? Okay, ladies and gentlemen, my Herbalife, Iron Condor, short 59 call, 51 put is filled at 41 cents. Now 40 cents. Okay, then my calendar. My calendar got filled at $3.20. Okay, any questions? Any companies you want to look at? Any company shares at all? Then from there I can show you how to structure. Baba, good. Okay, I will structure for you chart time. What is the budget? For trading or for holding shares? Okay, fine. Risk budget? Hey, Rick, hey. Last time, chart time, your budget used to be $5,000 budget. Now you cut down to $500. Okay, ladies and gentlemen, here is an interesting company. Look at the chart patterns. I had drawn this line here at $75 level, correct? Look carefully, okay? So this one, potentially speaking, can be another win. Okay? So for what? That means what? For you to enter a bullish directional trade, Baidu must break the $75 level support resistance line, the support, what you call the resistance support resistance zone here. Can you see here now? Okay, break the level plus another $2.50 price action value. So it means that break 75 plus 250. So the moment it breaks $77.50, you can do a bullish trade. Okay, so Chatai, you need to wait. Now, if you want to enter bullish trade, is a risky, because you know why? We are going to test the 75 resistance support zone, so resistance support support resistance zone at $75 level. So for you to confirm it's a bullish trend breakthrough, you need to break the resistance line here, plus I call support resistance zone now. You understand? If you layman term, resistance line here plus $2.50 based on current price action value, then you can do a bullish directional trade. If you break 75.50, the next level is at $85. Right over here. So even if you enter a 77.50 level, $85 give you a potential movement of approximately $7.50. We are not too greedy. If we can catch a direction movement of $5, I'm more than happy. Any question regarding BABA analysis? So any question? So you understand how I find suitable counter now? If do not break down, good thing. Sell a bear call spread. Okay, hit 75, reverse downwards, sell a bear call spread. Okay, then if the thing drop below $72, then you can do a bearish trade. Repeat, if failed to break $75, okay, and drop downwards, first trade you do will be a bear call spread. Second trade, if you drop below $72, you can do a bearish directional trade. From $72 down to the next support resistance line is around $80, $60 range level. So you got $12 potential profit to capture. Yeah, $12. Okay. Another question? Vicky, any question? Vicky, you got any American shares you want to buy or not? Tell me. Then I will structure one for especially for you. Poor you. Okay, how about Savani? To? Any counter? Yes. If you want to buy any American shares, or if you have a 50k, 100k, what you call a budget to do income trading, okay, tell me, that I will do something for you. Apple, good. Okay, wait. Before we continue Apple, Chatai, any question regarding your Baba. Any question regarding your Baba? Enough. Slowly lah. So many. You want Netflix, you want Apple, which one? Let's see the value first. FP. Facebook. Wow, Tesla. Okay, wait. Stop. Vicky, you want to do it for trading or you want to do it for pure income? You must have risk budget, no? Savani risk budget, I think should be $500 to $800 per trade. Okay? Your budget, I'm not so sure any change now. So there is a difference. If your budget is $500 to $1,000, it's different. Thomas, I'm prepared to buy the shares. A lot of difference. If I prepared to buy the shares, have what you call share risk profile, then of course, share risk profile always easier to make money than Apple. Any trades define. Hello, please define properly. Okay, do me a favor. Let me go delete all the nice first. It's too noisy. Okay, Baba, Netflix, Tesla. Hmm. Oh yeah, by the way, this Tesla, this Netflix look very familiar. Okay, so if Netflix break above the current support recent night approximately 100 and let's say $105 range. Let's say it break the night around. Let me check for you first. Let me give a minute. Let me check. This is here chart 9 here. Okay. Listen carefully. Look at this company called Netflix. It's $97.42. Now, Netflix have tested what we call the immediate resistance support resistance lines. So the test failed. How I know I failed? Yesterday tested, today just dropped 4%. Okay? Now, these two things you need to be careful. So if you test it and fail, two things will happen. Either the thing will drop down to retrace and test the $80 level, or there's another possibility level, it break the 10102 level to break through the 10 level and to test the 115 level. So now this company is in crossroad, means that is what we call in layman term, I call it head no tail. So very simple. If the underlying, okay, give me a minute, let me count for you first. If the underlying, okay, if the underlying drop below $93, you can do a bullish directional trade for this company. $93. Why $93? Simple. Now the market price is what? $4 plus here. $4 plus here. Market price now is $97 something. Okay, so minus $4 plus will give you 93. If it drop below 93, that means what? It confirm that hit the top and retracing downwards. Understand what I'm saying now? If the market break $93, you can do a bearish trade. Okay? Any questions regarding the bearish for our good friend Netflix. Okay. Next, the next trade to Thomas. What about it break out? If it break out, it must break out above the 105 level. Then you can do a bullish trade. Now, for those people who want to do a trade now, you can do it. Okay, let me check first. Okay, anybody want to do a short-term bullish, short-term bearish trade for this trade? Anybody? Very cheap lending trade. All my trades I showed you now, all these companies I showed you now are very low value. Okay, not very low value. It's good for learning now. Okay. You want a high probability trade or you want a low probability trade, gentlemen? A low probability, slightly lower probability trade, of course, still can make money. Okay? High probability trade, lower returns. Lower probability trades, high returns. So which one you want to go? Okay, here. See here, you can see my trades here now. I sell 100 call, or I can sell a 98 call. This is $1 spreads. Okay, listen be carefully, Okay, you see, March 2nd, 4 days, 28 cents. Look carefully, 28 cents. If I switch over to March next Friday, which is happen to be 11 days away, it's only 6 cents more. You understand say now? 6 cents more. If I switch this Friday expiry 42 cents now, if I switch over to next Friday expiry, it's only 46 cents only. So do you think it's a good idea to sell this week or sell next week? Yes, this week. Why? Because the longer you hold, the higher probability of market go against you, correct? Okay? And this trade is actually such a way for 4 cents more, for 4 cents more or 6 cents more, I don't think do you agree with me or my fellow traders? 6 cents more for extra 7 days. Do you think it's worth it now? Hato, Vicky, 4 more cents credit, 6 more cents credit, hold for 7 more days. 4 days, 4 days, 4 days, 40 cents. 4 days, 42 cents. Okay, then okay, 11 days, 46 cents. So which one? You want to sell 98 call or you want to sell 100 call? Actually, why is it more volatile? 4 days of price action value movement or 11 days of price action value movement. Which one is more volatile? 4 days or 11 days? No, 11 days. Ladies and gentlemen, Vicky, you've forgotten the one rule of income selling. You want to sell as short as possible. Premium. Short possible. This trade, ladies and gentlemen, is what you know. This is what I trade. This is hold to expiry. Since you hold to expiry or near expiry, you want to be as short as possible. in the income trade, I show you 30 days, 60 days, 90 days. We can do that because we don't hold 60 days or 90 days. We want to get out within 2-3 weeks. Okay? Or 1 week, better still. Okay? So you understand the difference now? Income method, I share do on S&P 500. We sell 30 days to 90 days with objective to get out as soon as possible. It means that 2, 3, 4 weeks I get out already. This method here we're using now is credit spread trading for stocks. The short time we intend to hold until the end. Okay? Hopefully expire worthless. So which one better? $1? Okay, I give you another choice. This is gonna be fun. So gentlemen, we got 3 pricing. Come. Short 98 call at the money. Or not exactly at money lah. Near at the money 44 cents. Short 99 call 36 cents. Short 100 call. Short 100 call 30 cents. Around 33 cents lah. So which one better? Good. Chart time, nothing wrong. 100. Well, ladies and gentlemen, there's nothing wrong shorting a 98 call. There's nothing wrong shorting 99 call or 100 call. It's up to you. All of the above are valid. All of those are valid. Are pretty valid. Just in case, you need to see the chart clearly. Fine. We go to 5 days, 5 minutes. 5 days, 15 minutes. Okay, 5 days can. So which one to sell now? It's up to you. 100 call better. Thomas, can I sell 100? Can I sell 102? Can. Okay. But you will not there's nothing wrong selling wrong is 702. But the problem is selling 102 means what? 19 cents. Okay. How about 101? 24 cents. My advice to you, ladies and gentlemen, for every dollar, try not to collect less than 30 cents. Okay, which one you choose? 100? 100? How about the rest? Sawani? Okay, I leave you to choose. This will be a good learning trade. Nothing, if you want to sell 98 call, go ahead and sell it 98 call. Because at the worst case, you lose 56 cents. It's good for learning. Thomas, I think it will go up. If you think it's going up, you can sell the put side. Not a problem. Okay? Any last questions or anything you want to look before I close down? Now it's really after midnight Singapore time. Okay? I think Jeffrey, I think Singaporeans are going to see Jeffrey still have. Any last question? Okay, if not, thank you very much. Okay, thank you very much for attending session. Oh yeah. I still need to do a trade. Later lah. Okay. Any question, please ask. I will send to you the screen capture of all the trades we've done so far. For me, very difficult Should I? Okay lah, take 99 call lah. Don't bother lah. It's fun for $1 spreads, no fun. Okay, now good night, ladies and gentlemen. Okay, take care, safe trade. Please ask right questions, or if you don't ask questions, don't ask for help, then I can't help you. Okay, goodbye, safe trades.